Welcome back to the channel. Today we're diving into a topic that has completely split the crypto community. Depending on who you ask, this project is either one of the most overlooked, deeply undervalued protocols in the entire ecosystem, or a cleverly disguised risk waiting to explode. Emotions are high, the debates are loud, and the data is honestly shocking. Because right now, there is a massive liquidation pocket sitting above $18 billion, and if price moves into that zone, it has the potential to shake the entire market. Traders who keep piling on reckless leverage may be days away from another painful reminder that the market does not forgive stupidity. We're going to break down where these massive leverage clusters are sitting, why the risk is higher than most people realize, and most importantly, what this means for the next major move. But beyond the liquidations, there's another story unfolding, one that most retail traders are completely overlooking. The fundamentals of one particular blockchain are nowhere near being priced in. And when we talk about being early to a technology, this protocol might be one of the clearest examples. So sit tight, because what you're about to hear is something that far too many people are blind to. This video is for informational and educational purposes only. It is not financial advice. Always do your own research and consult a professional before making any investment decisions. Let's start with the big picture. People constantly underestimate how early they are when it comes to transformative technologies. Markets don't always price things correctly. Narratives overshadow math. Sentiment smothers fundamentals. And nowhere is that imbalance more obvious right now than with the Internet Computer Protocol, ICP. Here's the straightforward truth. If ICP were valued at the same all-time high market cap that BNB reached, its token price would be approximately 45 times higher than it is today. From the current trading zone, that would place the token around $337. Now, that number sounds aggressive. I get it. But it's not a fantasy number pulled out of thin air. There are real technical reasons behind why investors believe ICP has the potential to climb much, much higher. For starters, when analysts compare transaction execution costs between major blockchains, ICP stands out in a way that most people have never actually researched. Sending transactions on ICP is estimated to be around 80 times cheaper than sending the same type of transaction on BNB. And we're not talking about tiny fractional differences. We are talking about dramatic, exponential improvements. And speed, that gap is even bigger. ICP isn't just slightly faster. It processes and finalizes transactions roughly 100 times quicker, hitting levels of certainty that real-time applications require. If you're building tech that depends on instant feedback, gaming, AI agents, data streaming, real-time communication, that performance gap is not a small competitive edge. It's a total paradigm shift. Now let's get into decentralization, the one metric most chains pretend to care about but rarely excel in. ICP has achieved a Nakamoto coefficient of 415. For comparison, BNB sits at 7. If you're not familiar, the Nakamoto coefficient tells you the number of independent parties required to take over the network. A higher number means better distribution of control and far stronger decentralization. And on this metric, ICP is not just ahead, it's the industry leader by a massive margin. So when people ask, why are smart investors accumulating ICP? The answer is simple. The technology is objectively powerful. The decentralization is unmatched. The fundamentals are strong enough to justify significantly higher valuations. The real question isn't if the market will recognize this, but when. Now let's talk about the part that's keeping short-term traders awake at night: leverage. A well-known crypto analyst pointed out recently that ICP is becoming extremely over-leveraged. Fresh long positions opened around $4.65, adding over $10 billion worth of liquidation exposure. Below that, a massive liquidity cluster sits near $3.44, loaded with nearly $19 billion in liquidation risk. On the upper side, the next major liquidation pocket sits around $6.18, carrying around $12 billion. These are not small pockets of liquidity. These are massive pools of potential forced buying or forced selling, the kind that trigger dangerous volatility and violent price swings. ICP already retraced down to the 50% Fibonacci level and dropped under $5.52. The key question now is whether it will retest $5.52, but this time as resistance instead of support. If that level gets rejected, bears will likely maintain control in the short term. But while traders obsess over immediate price movements, something more interesting is happening underneath the surface. Recent data shows ICP has overtaken both near and stellar in 24-hour trading volume. That's a sign that attention is increasing, with or without bullish sentiment. And here's why that matters. ICP is one of the few chains capable of running AI natively on-chain, hosting complete applications without relying on centralized cloud providers, and maintaining decentralized infrastructure at every layer. Most chains can't do even one of these things at scale. ICP does all three simultaneously. Now, we need to be realistic about the current market environment. The broader crypto landscape isn't in the strongest position right now, and it wouldn't be surprising to see ICP experience more downside in the near term. Liquidation clusters below the current trading range are still thick, and they could become short-term magnet zones that price gets pulled toward before a real recovery begins. But let's shift to something retail investors are overlooking: token distribution. According to research shared by Kyle Langham, someone who has done deep analysis on the ICP ecosystem, many of the wallets identified as whales are actually exchange hot and cold wallets, representing thousands of individual users. That means the idea of a few massive whales holding the majority of coins is misleading. Here's the actual breakdown. 44.3% of the entire supply is staked. 10.4% sits on exchanges as liquid supply. A portion of the remaining tokens belongs to Definity, the organization behind the protocol. Now, one criticism circulating online is the belief that Definity is dumping ICP. But let's apply simple logic here. Definity runs one of the largest research and development operations in the crypto industry. They have engineers, scientists, designers, developers, and an entire global team. Those people need salaries. Infrastructure needs funding. Operations cost money. Of course, they periodically sell tokens. That's how every major protocol pays for development. That's not malicious dumping. That's how an organization building advanced technology stays alive. So far, the market hasn't reacted dramatically to any of this distribution data, which implies support may still hold, but nothing is guaranteed. For traders sitting in stablecoins, opportunities will continue to appear. But instead of chasing coins that are breaking support and falling rapidly, it makes far more sense to focus on assets showing strength. Projects breaking downtrends, reclaiming key levels, or showing strong on-balance volume signals. Now here's something that genuinely surprised me. The 8-year ICP staking pool grew by 1.1 million tokens in a single month. That is not the behavior of people who think their asset is going to collapse. That is long-term conviction. While short-term traders panic, long-term believers are locking up tokens for nearly a decade. Finally, there's an important detail flying under the radar. ICP is now the 10th most traded asset on Uniswap, excluding stablecoins, generating around $1.3 million in volume. And this is not a typical ERC20 wrapper. The token exists through ICP's chain fusion technology, creating a cryptographically secure digital twin, not a bridged, custodial, risk-loaded version. It's significantly safer, more efficient, and more elegant than the standard bridging systems used by most chains today. In short, ICP sits at a crossroads. On one hand, the fundamentals, speed, cost, decentralization, staking commitment, and real technological capability paint a picture of a protocol that the market hasn't properly valued yet. On the other hand, short-term leverage risk, broader market uncertainty, and heavy liquidation zones could drive more volatility before any major recovery begins. Whether you're bullish or skeptical, ignoring the data would be a mistake. Because while traders chase quick profits, long-term holders are quietly positioning themselves, and the numbers don't lie. So, what do you think about ICP's current position? Are you bullish on its growth in AI and DeFi? Drop your thoughts in the comments below. If you found value in this deep dive, don't forget to hit that like button and subscribe for more breakdowns like this. Thanks for watching. Stay curious, stay cautious, and I'll catch you in the next one.